Let's go to St. Petersburg, Florida now, and we are joined by Jeffrey Saut, Chief Investment Strategist at Raymond James. And Jeff, in fact, was one of the first to bet on the bull market rally in 2009, and he helps oversee $230 billion in assets under management. Jeff, good to have you with us. Let me first get your thoughts on the U.S. House of Representatives passing that financial overhaul bill.
Well, to begin with, it's like closing the barn door after the horses have already bolted, if you will. Typical of our congressional elected officials. That said, I don't think it's going to be all that impactful on the big banks. I don't think it really affects Citigroup and Bank America. I think it is more impactful on the Goldman Sachs and Morgan Stanleys of the world than it is on the big banks.
So, Jeff, you don't think there's going to be much market reaction to this news possibly being passed in the Senate? I mean, that's still up for debate. Of course, it needs 60 votes to pass the bill. But if it does go through, I mean, what do you think the damage might be on the markets? Do you sell these big banks?
I don't think it's going to be all that impactful on the markets. I think the markets are reacting to far more macro issues than the outrageous statement that Nancy Pelosi just made. I mean, there were regulations on the books that would have prevented Bear Stearns from levering its balance sheet 40-1. The regulators went to our congressional leaders and told them this was a problem back in '06, and people like Maxine Waters says there is no problem at Fannie Mae and Freddie Mac under the magnificent leadership of Franklin Raines. I mean, it's outrageous what she just said.
Okay, but people are trying to protect taxpayer dollars. Of course, they had to fork out that $700 billion in the TARP funds. Don't you think that sort of resonates with the U.S. American public right now, who are angry that bankers are still getting these huge bonuses while so many are still out of work?
Yeah, that's absolutely true. But our politicians, now I lived inside the Beltway for years. I have a really good network on the Hill. And the politicians are doing what they always do when they are indeed ultimately responsible for what happened. They are playing the blame game, and they are trying to point their fingers at other people. And the unread American public that doesn't really understand what happened is exactly what the Nancy Pelosi's of the world are playing to.
Okay, well, I guess people are trying to protect their money these days, taxpayer dollars, and that's what you're advocating to investors, especially in this market volatility, right, Jeff? Because you're saying people should maybe look at protecting the cash that they've made on their investments. What does that mean? Does that mean getting into cash? Does that mean getting into the safety of treasuries right now?
We came into this year with one of the mantras being, I think the trick in 2010 is going to be to keep the profits accrued to portfolios since the March 2009 bottom. I turned especially cautious during the month of April. We got the flash crash, and following that, we got a Dow theory sell signal on May 20th. About a week later, we got a sell signal from one of my proprietary indexes that hasn't given a sell signal since December of '07. And then a couple weeks later, we had the long-term stochastics turn down. So I think caution is the watchword right here. I don't think we're going into a double dip. There's a possibility of it, but it's unlikely in my view. And I think earnings are still going to look pretty good into the fourth quarter of this year.
Okay, so I guess, Jeff, when people give this debate to you or ask for your answer in this debate, is this a bear market rally right now that we've seen in 2009, or is this declines, a correction that we're seeing in a bull market? What do you say to that, Jeff?
Well, there was a Dow theory sell signal in September of '99. I wrote about it, and I suggested that in past market cycles that we were liable to be in a very prolonged period of a trading range market that would be punctuated by mini bull and mini bear markets, just like we saw between 1966 and 1982. So I think we're in a down phase within a trading range market that we've been in since 2000.
Okay, Jeff, thank you for sharing your time. Jeffrey Saut of Raymond James joining us there from St. Petersburg, Florida.